dance, make it hurt.
What's up, Relentless Traders? It's your host, Surreal.
And Juangar, and welcome back to week 3.
We made it again.
Yeah, we made it again. So definitely we're gonna keep the same structure going into the podcast this week. We're gonna go over the topic for the week and kind of what we did this week and what we saw in the market.
Yeah,
So
sounds good.
yeah, just the topic for the week is just gonna kind of be about drawdowns because I think we had our fair share for this week. Isn't that right?
Yeah, it was definitely kind of embarrassing to have to just see my portfolio percentage just plummet on the video thumbnail.
Yeah, it was a little rough, and it really just comes back to where is our setup the strongest and what we see in the market personally. It's okay to, follow our rules and getting some exposure, but when you see what we saw this week, it's also okay to scale back and really just step away from the market at that point.
Totally. That restraint is key, especially when, later on we're going to talk about drawdowns and the things that go into that. So, because we're experiencing, that's why we chose the topic, because we're going through it right now. Um,
Yeah, 100%. You want to just kind of dive us into your week, Surreal, and just kind of what you saw and whatever trades you took and
sure.
whatever you want to talk about that.
Sure, yeah, and I'm actually gonna share my share a chart. So I know last week, we discussed two of my trades in my end of the week review. This week, there's not much to focus on. Everybody's talking about the same setups on Twitter. I have issues with my scanning routine where I'm still ironing that out because I want to cast a wide net across the market, and so I'm still tinkering with scans for my different setups that I have, and so for me, when I'm not seeing much out there, that's what I'm more realizing through this market environment where it's getting tougher. There's less setups. Everybody on Twitter's talking about the same stuff, so you're like, everybody's piling in, to the same longs, and so the market's just been so choppy, and so I saw DWAC when last week when we had that discussion of where I took the trade right here at 55 when I saw it breaking out on volume. And then it turns out it had some news. And I had that whole issue where I couldn't sell because of the PDT. So you could see here the next day it came and took me out when I had a nice profit. But, is what it is. But the main thing that for me, the biggest lesson this week, Juan, is the entry. With this choppy action, you cannot afford to be chasing entries. I
Yeah,
mean,
yeah, 100%. I think both of us really to an extent really learned that we have seen the correct things in the market, right? We've seen the moves. It's not about knowing where or when the moves are going to happen. It's just about us getting in at the right moment. A lot of people will hold through these drawdowns and they'll be like, okay, it's gonna go, and then it doesn't go for months, and they've been in a big drawdown, they're bag holding at that point, and it's like, oh, I knew it was finally gonna go. It's like, cool, but you just went through all that opportunity cost to hold that bag and wait for it to go, right? And that's why we use stops, and that's why it's okay for
yeah,
us to be wrong because we don't want to hold those bags, but the purpose isn't to invest in our case, the purpose is to
right.
trade. And we want those, if it's going to be a runner, let it run for, for a couple of days. But I want to be in right before it runs. I don't want to be in, a couple weeks before, chasing a potential run and then just bag holding for a couple of weeks until it finally does run.
And that's where a lot of the edge comes in too. When you start thinking about, okay, I have a setup here. This is one of my setups, as we can see from the chart, is I call it an RBO. It's just a range breakout. And there's a lot of different kinds of consolidation patterns. And so this is one of my setups that I identified. It was just a stock that made a big move up, pulled back, and it started consolidating. You can see here, price just fluctuates up and down, and the volatility contracts. Well, when that happens and supply is dried up, when any sort of amount of demand can come in, it can push this out of its range and begin expanding and breaking out to the upside. And people see that, and they come and chase, and there's big orders in there, and everybody's trying to pile in. But it comes back to the topic of the timing and the entry. Like no matter what time frame you're on, whether you're an investor or whether you're a swing trader, or whether you're a scalper, day trader, timing and entry execution, the the more you can perfect that, it's going to give your trade so much more of a chance. Because one thing that I realized is that when me as a breakout trader, you know, I love trading breakouts. I'm thinking, what's the earliest potential place I can get in where I see what I need to see and then I can enter that. And a lot of times I found myself market ordering into these when I see the strength and the price moving with big volume coming in, and I see it moving, and I'm market ordering in. But there's another issue that I've realized too, is that I keep my risk extremely tight. I like to keep it to 2.5%, meaning from where I enter, I have a sell order set 2.5% or less from my entry, and that's all and then I size accordingly. So how much size I go in with, share wise, that's how much, that's where you get that dollar amount of risk. And so I really dial that in and I look for these big moves to the upside, but I'm only keeping a tight amount of risk on the table. And I want to get it, I want the position to get into profit quickly. And what I realized is, by me market ordering into these big movers when I see the strength, the problem is any sort of pullback or wicks on some of these, if I get too aggressive with moving my stop up to break even, they can just take me right out and then just flip and keep going up. And so really, it dawned on me like, hey, just because I'm managing risk tight, doesn't mean I can't trade this setup, or I have to keep trading it this way where I have to market order in when I see the strength with a tight stop. But I need to look for more anticipation type entries. And it really comes down to the tight areas on the chart. So I look at it as I'm trying to time the entry off of a larger time frame, say the weekly or the daily, when it's breaking out of that range. And then my strategy is, because I'm so risk adverse, in a sense of like how I utilize my stops, I want to also take that same concept and nail the entry on the intraday, letting these opening range, this is a 15-minute here, letting these opening ranges kind of play out. That's 3 5-minute candles at the open that you have to let play out. But when you're patient like that, even if it just rips and leaves you, it's going to pull back, like we talked about one.
Yeah, 100%. And timing those low risk entries is going to be extremely crucial from now on. I mean, we've seen this style of market the past couple weeks, right? And even scalpers are getting taken out left and right just because this market it's not, it's a lot different than what we've seen in the past year alone.
Yeah.
And
And it's hard to,
yeah,
sorry, go ahead.
it's moving erratically. No, no, that's cool.
Yeah.
It's moving erratically, and it's really taking out, midway through the day, everything's gonna flip upside down. It's gonna make a U-turn, and then it makes another U-turn towards the end, and then everybody's
Yeah.
like, "What the hell's happening? What the hell's going on here?"
Yeah, and that's where you got to adapt to with the timing, and not just on the entry side, but like that's so interesting when I kind of realized that, and we were talking that through, and it kind of just dawned on me like this light bulb, like because you can see it here too on this day. This was the day that it broke the actual range on the daily on this candle, and we can see the opening off the 15-minute. You can see where I entered. I entered up here on this shooting star. I got to it late because I wasn't paying attention this early in the morning. I had some stuff going on, so I kind of missed this breakout here. But when I looked at it on the weekly and the daily, I could see this range was so huge. I knew that it was going to make a powerful move, or that it had a high probability. And so I really wanted to get in on that, because I was thinking, okay, if I have this intraday resistance here, these two levels, from previous price action. So I knew they were important. As we can see, I had that level already drawn. And so when it got up in here, I saw that it was churning here. Well, talking about my tactics of entering, here we can see that it did pull back, and it was extended as it moved up. So I totally was buying extended there, but I kind of get baited in with that by the looking for the price action in the volume, because this candle was really green right here and it was pushing out. So to me, I was like, oh, it's breaking out of this previous resistance on super high volume. Well, the problem is the candle faded back in and closes a shooting star at this resistance, and I chased that buy order. And I actually didn't honor my original stop. I tried to uh, push my stop down, which is a big no-no. I never do that. I do have parameters for max stops that I want to take this year. Like I don't want a loss to get over a certain percent or a certain dollar amount. And thank goodness I had that rule, because even though I broke a rule of moving a stop, which I never do and I will never do again, it minimized the loss because I had that secondary rule of like, hey, if a losing position ever gets to this amount, like either it's because I grossly just held it like an idiot, which I will never do because I always use stops, or because I position size too big and I didn't set my stop properly. So that really saved me. I realized once this pulled in hard, it was, and I said, okay, well, maybe it's just going to pull back and kind of use this. So that's why I kind of lowered my stop down here. And then I realized it just snowballs. Like one bad entry, and then one bad move of a stop loss being moved down just a little bit more, right? Oh, just move down a little bit more. Like you cannot do that. So to me, the problem is coming back to my entry mechanics and what I need to see. And so I'm going to stop chasing price and I'm going to start chasing tight, low risk entries. Because if price goes, it's going to have to pull back at some point. So even though I missed the breakout here, the ideal buy point was somewhere in here where these 15-minute candles were getting tight and then it was starting to expand to the upside. Because now, after if I'm buying closer to this danger point down here, that's going to give my stop a lot more room. And then look at that. I would have been in it for the next day for the swing if I would have bought on this pullback down here. Instead, I chased price up here with a bad entry. And then I made a second bad mistake and I moved my stop down a little too much and it still took me out for a bigger loss. So it came full circle off this trade. And that really excited me too, to kind of stumble upon that and realize the issue of me chasing the breakout price action with market orders and then using tight stops, how that keeps stopping me out, and realizing, hey, I need to pay attention to constructive price action, and then I need to look for an area where I can get a low risk shot at it and get some position size on. And then you can even have an option of adding on later, as it breaks out intraday.
Yeah, 100%. And I think that really comes back to market psychology, the whole chasing the move. It's a little bit of that FOMO. Thankfully we have set rules that you and I follow pretty strictly. We're pretty focused in that area
Very
to put
disciplined
it.
for sure.
So FOMO isn't as it doesn't have the same effect it's gonna have on us as it has on a lot of newer traders, the chasing and the bag holding. But
Right.
it's still gonna affect us, and that's what it is, right? You see that big volume moving, you're like, oh my God, I'm gonna miss it. You
You
know?
see it, yeah, and it's based on a setup too, which is so much more frustrating because it's like you want to manage risk and do it right, and then you know what the characteristic of a good breakout or a good strong price action is. The problem is the entry. Like if you don't have a tactic where you're able to where your timing is so good off the main higher time frame pattern that you can keep a wider stop on the daily. I don't trust myself enough yet. I'm not that good. I know I don't have enough experience to perfectly time, by like one or two tries. If I was going to take one or two tries at this range break, to know that, hey, on this day, I know I'm going to nail that entry. So therefore, my stop can be big enough to be low of day. Like I'm still trying to say, hey, I know I can be wrong on the daily. And so if I'm going to be wrong on entering today, I want it to be very small. And well, I can't do that chasing price. So the only other option is to chase tight risk areas, because then I have a shot at not getting my stop hit and then getting the breakout, timing it right there. So
Yeah,
that
100%.
was huge for me, man. I'm so happy with that because now it brings me so much more clarity and focus. And it's like when I see stuff like this, these big extended price action
Yeah,
candles, like
you
even
already know it's
here.
extended. Yeah, at that point you
Exactly.
already know not to chase. You're like, okay, this is not a tight risk area. At some point this is gonna pull back.
And we talked about it too, is like, what would you want to see after a big extended move?
Yeah, a pullback, 100%. Yeah, that
Still wide change,
it's
yeah.
it's not really, it's not rocket science, but the psychology plays such a huge role in that.
Oh man, for
This
sure. All right.
this transitions into a trade you took this week as well, right? you know, that entry tactic. I think you took forward, right?
Yeah, I did, and I can pull that up real quick. I know we're running on time here. Um, yeah, forward again. I tried to take it, and I actually nailed it on the 15. I saw it had this range on the daily. It had a nice big range earlier, like everybody else in Finchwit saw. Exploded out of it. It came out of this range nicely after the third try. Had a little bull flag, broke out of that range. Actually, that was the one I talked about last week, and then it made a big move up, and it started ranging again, and it got tight up here. And this day right here was when I was eyeballing it because I had a feeling, price action was tightening right near the top of the range. And the next morning, right here, the 15-minute, put a nice hammer in. I waited for this hammer to form. Wasn't getting antsy or anything like that. And I saw that tight hammer form. And as soon as I saw the next 15-minute candle open, come down and start going on volume, boom, easy. Got an entry right there at 2470, and now I can even use low a day and
Yeah.
keep my super super tight,
Yep.
super tight. And then because I'm in these environments, I'm not trying to swing it, but I'm using more so day. But I want to use those day trading tactics to be able to manage risk down to the intraday level, but timing it off of a
A
larger
bigger
time
time
frame
frame.
setup.
Yeah,
Yeah,
100%.
exact. So super small risk and very big potential reward is
Yeah.
like that's the crux of my strategy and what I'm trying to do. And this got a really nice move up, and I sold some in a strength, and then I cut the rest of the position in a weakness just because of market conditions. Before it kind of came back down to my entry here the next, today. So I
Yeah.
cut it yesterday.
Yeah,
But
but
yeah, that
yeah,
was
but you need the market conditions, and you need to cut the trade
right.
when it wasn't giving you the what it needed
Timing,
to.
right?
Yep. Uh-huh.
Timing on the entry, timing on, taking profits based on market conditions. This is the game getting better and better.
For sure. Yeah, so actually we can transition really quick into my trades. Give me 1 second. I'm gonna kind of talk about two trades side by side. I'm took Lucid BA this week. Lucid was a lot on a lot of people's radar this week as well. That's one of those things that I don't really follow too much because I don't want, I don't want that to be a fake out, especially when you got a whole swarm of people watching. I feel like the market's more prone to fake outs in that at that instance.
Mhm.
I follow a lot of price action. I have my set of rules, volume, key levels. Both of these were key level breaks, had nice downtrend lines they were following. My first trade I'm going to talk about is Lucid. I want to kind of talk about these two back to back because I attempted re-entries after we spoke about last week re-entries when I took that loss on MU and didn't re-enter when volume was telling me, hey, get in. The first trade I took on Lucid, I believe was Monday, and I actually made this back the day after when I took another trade on Lucid when it did break that key level on really good volume, as you can see here. I took this trade on Lucid. I was watching this key level and I was watching that volume. The volume was really pushing in those first 10 minutes. And I took a trade on Lucid right before the 43, my 43.15 level. It rejected pretty quickly. I was in profit. I got an early entry because I know we had spoken about this before. We spoke about it over the weekend. We spoke about it last week about getting those
Yeah.
early entries.
Yeah.
So I tried to anticipate that breakout at first on Lucid, and I was in profit and I came back in. I wasn't too upset about it. The setup was there, volume was there. It was heading right towards my key level. I anticipated with enough time, and I got out with a small loss, so I wasn't
Mhm.
too upset about that.
And it was quick too, right? I think I remember that one. It barely got up near your average win. Like you hit usually 25 percenters, so it was almost there, but not enough to make you want to
Yeah, no, I thought,
quit.
and the volume was really telling me because even the next candle opened up and the volume instantly pushed. So I was like, okay, let me wait, and then it reversed pretty quickly. I'm like, and then I got stopped out. So that's one of those things I kind of want to work on is just kind of if I see that reversal happen on a smaller time frames really fast, I'm just gonna stop myself out before it even hits my stop if I can. Even if I can stack those small wins, it'll work out in the end. So it's
Totally.
something I'm gonna keep in mind going moving forward. I took the trade again right around 8:30 my time, Pacific, obviously. The volume picked up midway through the day, and the thing with Lucid is, it's kind of following that meme stock pattern where it just picks up volume randomly throughout the day, and then it'll make a big run.
Yeah.
And so it picked up volume and it headed, and I saw it early too. I saw it early, picked up volume, and I bought it right under my key level, and instantly got faked out and stopped out again. And this is when you and I had the entry conversation. I remember
Yeah.
specifically because we went over the chart on the 15 minute chart, and we saw, like, if you see at around 740, 755, the price was right under VWAP and consolidating. This would have been a perfect entry right here because I could have kept my stop extremely tight. What is that? It's like a 15, 20 cent stop on a $40 stock. The contracts aren't going to move that much in that
Right.
range. So you enter there and you start seeing this volume expansion candle through VWAP. That would have been the moment to enter right there. You see the next candle hold VWAP and then it just go from there. Even if I get a rejection at the top at my key level, I can stop out for a profit
Yeah.
still, for decent profit too. I'm probably already up 20, 30% on that contract. And if
Yeah.
it breaks, even better, because now I just front ran everybody who's chasing this key level breakout.
Yeah. I think that's the biggest lesson that anyone can take away from, no matter what your time frame is. If you think about that, contraction leads to expansion, and you get the bonus of being able to keep really tight stops. So if you're wrong, it's just a small loss and move on to the next one, or let it set up again. Like, let as a trader, as a newer trader, when you're looking at these charts and looking at candles, if you really study the price action before a big move happens. Let the chart draw your eye to that, no matter what time frame you're on. This is the beauty about charts. It's so many things are interchangeable, from a monthly to a weekly to a daily to a 15 and a 5 minute. If you notice where a lot of the big moves happen, where they originate from, price action is contracting. The candles are getting very small. And just before, a lot of times, and on intraday, you'll see that the candles get very, very tight, extremely, extremely narrow. You're thinking you're looking for a doji. And then if you already have a direction bias, on which, how you're trying to trade that stock for the day and which direction, um, these tight areas typically, give you the best risk to reward ratio, and that's where the move originates from anyways. So
Yeah.
let high areas on the chart start drawing your eyes. Just don't forget about or don't let the big moves like distract you, and that's what like causes the FOMO. Like, you want to get away from that, and you want to let the low risk entry areas, that's where you want your eyes to go, and train your eyes to see that. Because if you had to have a setup on a larger time frame, and you just take that low risk entry idea to a lower time frame, you're probably going to be able to manage risk super tight, and you're going to have a very big reward if
Y-
you're right.
Yep, 100%. And I think that, like I said, that comes back to that market psychology and people not wanting to be wrong almost instantly.
Oh
That
man.
people don't want to be wrong, and that's fine. That's it's human nature not to want to be wrong, but you got to know that the trading is a game of probabilities and not certainties, as Mark
Mm,
Minervini, quite frankly put it. And that's,
yeah.
it's very important to keep that in mind when going into trades.
Yep. And
Really
not
quick.
one trade. Oh yeah, go ahead.
No, no, no. Go ahead.
I was gonna say, and just remember too, like, not one trade makes or breaks us. Like that DWAC trade, even though it was a slightly bigger loss than it needed to be, it was still under my max loss that I want to take for the year on any one trade. And we got so much experience from just you and me, one trade, and just talking it out, us two, and figuring out like what's not making sense with these entries, or what's a way we can get in earlier and front run people. You know what I mean? To like, because at the end of the day, that's what it's all about. You want to get in as early as you can to where it makes sense for your setup, and as soon as you see what you need to see, you get in and get that trade. And one trade doesn't make or break you, but if you're learning from every lesson, you know, you're gonna progress super fast.
Yeah, 100%. And I think it's important to keep that in mind.
Yeah.
Just with BA, it was the exact same thing. I did a reentry on this and I got stopped out. This was a whole wide set of broken rules.
Mhm.
I entered on I think I entered in the first minute. The contract went absolutely wild. I think I was 40% in profit within maybe 5 to 10 seconds.
Yeah.
And the contract reversed instantly. And then I re-entered, I think within the first 5 minute candle. I don't know why I did that. I mean, volatility was insane. BA volatility was absolutely ridiculous. And
Yeah.
this wasn't giving me, in the second entry, it was more like a revenge trade, a FOMO.
Mhm.
And my second trade on BA that day was a bigger loser than my first trade. My first trade would have been fine if I had, I did stop out at my 10% average. I think it was actually 15%. And then my second trade, I think it was like a 25% loser on the contract. I typically try and keep those losers to about 10 to 15%. I'm taking trades of about 25 to 35% at the moment, so I can keep that multiple really in check there for
Yeah.
these contracts. But this was a wide set of rules. I'm trying to keep in mind that whole rule thing. It like you said, the one trade's not gonna make or break my trading career. So I got to keep that in mind, keep moving forward, and keep following my rules.
Yes, sir.
So for this week, we kind of wanted to talk about drawdowns because we're both in a little bit of a drawdown here, Surreal, huh?
Yeah, it's rough. It's rough like being down, especially, after coming off, 2021, you want to start it on a good note in January of 2022 and to be down, but I mean, I think we've discussed this and we've seen it. A lot of people are struggling. We know the market is super tough, so, coming back, keeping that perspective, um, of drawdown psychology. If you don't know what a drawdown is, actually, it's just your account coming down from highs or from a certain point. Like if you're talking about from starting equity, whatever amount of money you start with at the beginning of the year, if you want to look at it like that, or typically it's from your account peak highs and then how much you're coming down off of that. Because we know losses work geometrically against us. So the more that account comes down, the more percentage it's going to require to come back up to get back to break even. So the deeper that hole is dug, the more work that you're going to have to do to get out of it. So minimizing that damage to your account when you are in a drawdown is super important, and especially like maintaining, the psychological issues that come along with it.
Yeah, how do you deal with that psychology, you specifically?
For me, I mean, now that I have a good set of data from 2021 and I'm more focused this year with setups, I wasn't even stressing it. I started out that first week down 3%, 3.75%. Um, and then, I had the big DWAC loser this week. And so I dug the hole and I'm like, "Ugh," I'm digging the hole deeper. Like, and on top of that, I made the loss worse than it needed to be by moving my stop. So instead of having, a 4 or 5% drawdown, it's now almost a 9% drawdown.
Yeah.
So psychologically, I was handling it really well at first. I'm like, I don't, it doesn't matter. I'm learning from every loss. And like, it's so much good quality information. Like, how much better is that going to make me in the future? That's how I look at losing trades. I don't get upset. It hurt a little bit, but I give myself, a minute or two, 5 minutes to work it off. And then I immediately come back and I say, what can this mistake or this trade teach me? I want to learn from everything, because if I can fix my problems in 48 hours, fix the worst parts of my trading, how much better is that going to make my trading moving forward? So that maintaining that mindset is super important, especially in drawdowns. When you're in one and you can easily go off the path and start, thinking some bad, thinking some bad things, and let yourself, get off the path and making bad trades. What are you feeling? You're in a drawdown right now yourself, right?
Yeah, right after being green too is the funny part.
Yeah,
Um, I'm handling it rather well. We spoke about the first week about, how what our account sizes were. I don't have a very big account, and I'm using that as a focus for setups more than as a
yeah,
focus for profits, right? I don't need the Thankfully, I'm in a position in a situation right now where I don't need to pay my bills for trading. So I'm trying to focus on really getting my setups down and then knowing that I'm just going to be able to size up eventually, and I'm
yeah,
going to be able to pay myself from that. But being in a drawdown blows, man. I mean, it really does. Like you take the loss, and I don't know if it's a monetary thing or if it's a psychological like I was wrong thing. It's kind of hard to pinpoint that because even though I would definitely say actually it's more the I was wrong. And if
Hmm.
you broke your rules like I did on BA, you took you take a little bit bigger of a loss than you expect, and you're like, oh
Right.
man, like crud, I really messed up on that one.
Yeah.
So it's something that you have to take step by step, and you can't really let it affect you. Like you said, the one trade isn't gonna make or break your account, and people
Yeah.
have to take that in mind moving, moving through even wins.
Hmm.
You can't really say, wow, I just made my entire, just keep trudging along, keep learning, keep perfecting the setup, keep perfecting the process, and that everything else is gonna come with time.
Yeah, I think maintaining that balance, like, not allowing yourself to become a pendulum, because when the market's good, I noticed too, I'm super exorbitant. I was really happy like when I hit that good period last year in 2021. And I like winning, but I think ensuring that you're always staying neutral so you can be objective, right? Because if you're getting super excited and look at how much money and I'm screenshotting it and then I take profits and then, what if it goes higher?
Yeah.
What if the trade kept going and I just got so caught up in the money? So I think like it goes both ways. Not allowing yourself swinging too negative and not allowing yourself swinging too far. To like euphoria, because that can hurt you. By not taking profits, or hurt you by taking profits too early if you think that's a lot. And the trade was like, no, man, I had way more to give you. So yeah, just staying neutral. Staying neutral so you can be objective and just so you can just trade and flow with the market. That's how you flow with the market, is maintaining that. And you got to maintain that even when you're in a drawdown. You got to maintain that fire, that focus, and you got to know, hey, if and we can kind of roll into tactics here to combat the drawdown. Um, like what are some things you think you're going to be doing moving forward, in these next potential even worse, choppier, potential more downside, more volatility? What are you looking to do to kind of like offset that to maintain your risk so you're not digging that hole deeper?
So for me personally, I like for example, I find myself one of my habits is opening up active trader before the market opens, right? Obviously, I have my setups, I have my plans before the market opens, and I'll input the contracts into active trader on Thinkorswim, and I will get ready to execute trades where they need to be executed or not, that just depending on what I see. Just because my time frame is so small that I gotta be ready to execute pretty quick.
Right.
I find myself even on days that I don't have a setup opening up active trader, and I'm gonna stop.
Hmm.
That's it's one of those things where like you almost get that I'm a very risk adverse person, but even me, I find that I still get the itch to trade.
Oh, everyone does.
Oh yeah, I mean you want that euphoric, you want that euphoric, oh I made money today, feeling. Or I just took a trade today because like we just spoke about, it isn't even about the money for us. It's about the setups and about
Right.
continuing the process, right? There are certain things I'm working on currently with different style setups, so I'm gonna be probably executing a little bit more than I'm used to.
Okay.
But I have to know when the conditions align for those
Right.
setups to trigger. And there's this market's been rough for everybody, man. Like, they just even to start out the year, and I gotta know that even me as a new trader, my goal is to preserve my mental capital over anything because I want to be in this game long term. I
Mhm.
don't want to be in it short term.
Yeah. And it's hard to do if you dig that hole super deep and you take a big chunk out of your account, and then you can see, I can see totally too how, as a newer trader, or me for last year, how like when I did get into a drawdown, how your decision making just becomes so much more worse. And it's like, if you utilize tactics like cutting size, cutting frequency, going back to your setup criteria and saying, hey, what does a perfect setup look like, and what is some criteria that can cut out setups that I can say, hey, this is some criteria that tells me not to take a trade, right? Because in an environment like this, you don't want to be trading more unless your strategy is proven and geared to this kind of movement and you can execute like that. But for people like us who are newer, I think that just kind of cutting that size down of like that's what I'm looking at doing is cutting size down for sure. And we talked about this when I took that Ford trade this week. I started out with 500 shares, and I was like, no, no, no. I cut it down to 250, and I'm like, no, no, no. I cut it. So I took the trade on 100 shares
Yeah.
because you just have to keep that awareness, and you got to say, hey, like, even though I know this thing looks powerful, like, what's the real reality of this holding this for multiple days? And so it's like
Yeah.
on big size too, with volatility. Like I'm not looking to try and get paper cuts on big size and chip away at that account. So,
Yeah,
um,
100%. And I think that goes for just any trader, if you expect, whatever type of trader, commons, options, if you've been used to sizing up because the market has been either bailing you out or following through, and now that it's not, you gotta scale back. Focus on the entry, focus on the setup. If you have to take profits quicker, do so. If you have to cut losses a lot faster, do so. Um, there's a lot of stuff that we as traders can really work on to minimize those losses, and that's the entire purpose of the market, right? Of us as being of us being traders, is minimizing the losses and exposing ourselves to good upside potential.
right. Yeah, it's I think we'll be fine. I think we're in a good mental space. Even though, the account's red, I'm not stressing. I know you're not stressing. And this whole discussion shows that, right? What are we sitting here talking about? We're learning from all the losses that we took, and that's going to come back and pay us tenfold moving forward. So that's the kind of mindset, that's the kind of, thought process that you have to have. It comes back to, hey, do you have a setup? What does that setup look like in these kind of conditions? Okay, what if it stops working and you start getting in a drawdown? How are you going to handle that? You got to have a process. You got to have rules for everything, and sometimes you learn that from others, right? Other traders, and sometimes you have to learn it from experience and your results. So, yeah, I think we're gonna be fine, man. We just got to keep pushing, got to keep working every day. I love doing these podcasts with you. We always are talking. We're in the trading room every day, anyways. So I like having a public version of that and kind of just regurgitating what we've already talked about, throughout the entire week.
Yeah, it keeps us accountable, and I
Hundred
really I
percent,
really
yeah.
like the fact that it does that, because we're not experts. We don't say that we're experts, but we want to get to that level
That's what
someday,
we're
and
working
that's what we're
for.
working for, 100%.
Yeah. Yeah.
And I kind of just want to leave everybody with like a quick quote from Mark Minervini, just because it's very important that everybody protects their accounts, especially when they don't have edge in the market. So he says in the stock market, you're playing probabilities, not certainties. That means you cannot be correct all the time. If you make more on your winners than you lose on your losses over time, that's all you need to accomplish to be successful. So it's about minimizing that drawdown, man.
Yeah. And he really prides himself on doing that too. 100%. That's where my risk management understanding came from was Mark.
Yep,
All
and that's
right, man. I
psychology.
think
But
that's good. Yeah.
yep, we can call it there. Thank you everybody for listening to another week. If you stuck around with us this long, and we'll see you in the next one.
Yeah, guys. And same as always, just remember, manage your risk, stay focused, and be relentless. We'll see you next week.
See ya.